Now adjust the volume control so that the sound can be heard in all parts of the room.
This is the Protect Your Assets podcast.
Mr. Sandman,
You get the idea?
bring me a dream.
It's on the internet.
Make him the cutest that I've ever seen.
Go on.
Give him two lips like
It's like no cheese I've ever
and
tasted.
tell him that his lonesome
Here's the
nights
Sandman.
are over, Sandman.
Today is Valentine's Day, and since it's Valentine's Day, I think about my sweetie. And then I think about dating or chemistry. And then I think about how that relates to what I do for a living. I always say this because the relationship between a financial advisor and a client, between me and you, it's really a lot about chemistry. Are we compatible? Do you like me? Do I like you? Do we see eye to eye? Do I bring value to the table? There's no rule that says you need to hire a professional and manage your financial life. It's perfectly okay and possible to handle things on your own. But do you want to spend your free time, your days of living your ideal retirement, researching, trading, planning, managing your money during market hours? Because markets are changing. Or are you looking forward to enjoying your life, your family, your kids, your grandchildren, and everything else that might come with your so-called golden years? That's what I thought. So if you're thinking about hiring an individual or a firm to act as your financial quarterback, then you want to make sure you hire the right person and avoid some common mistakes and missteps that we see people make in the process. So today, because it is Valentine's Day, we're going to teach you the 5 questions you need to ask your potential financial advisor before you take them out on a date. Good morning. Welcome to Protect Your Assets. I'm David Hollander, your host. For those of you just joining us for the first time, welcome. You heard the jingle. People around here, they call me the Sandman. You can always email me a question. Maybe something comes up. You just want to know what you might want to think about. Email questions at pyaradio.com. That stands for Protect Your Assets. Questions at pyaradio.com. Now, let's get started. Well, consumers looks like they took a break in spending. So is the rally over? Well, the Dow was off this week, 1.2%. S&P off 1.4%. NASDAQ not so great, off 2.1%. International index charged ahead once again, up 2.9%. Year to date, look at that. MSCI EFI up almost 9%. Whew. 10-year Treasury starting to look pretty good at 405 once again. Oil at 62.80. Will oil break the critical $60 a barrel? That's unknown right now. Last week, saw a lot of economic news. We had the labor market starting to show. It's starting to thaw a little bit. Not so bad. We had some surprises last week, some payroll growth. Looks like people are hiring again over the last 3 months. Unemployment rate went down from 4.5 to 4.3. Inflation, not so bad either. Year over year, we're looking at 2.4%. It's not bad. So what's going to happen now that Jerome Powell only has 2 more meetings? That's it. He's out. March and April. Then what? We don't know. And as you've seen these past couple of weeks, volatility, like I just mentioned, has started to pick up. This has led selling across the mega cap techs, with Magnificent Seven down 2% last week, as I just said, taking losses in 26 to almost 7%. So what do you do amid episodes of volatility and rotations within the equity markets? Well, you got to continue to be diversified. If you're just not sure, well, you should speak with a financial advisor who we're going to talk about today, how you interview one, what you look for there if you've never done that before, because they can help you navigate these economic risks, geopolitical policy shifts that are going on all the time, and they can help you keep track of your portfolio or make sure that it's on track to achieve what you're looking to do. Otherwise, you're just sort of going it alone. What's the number one mistake people make when they hire a financial advisor? Well, you're going to find out what it is when I return. You're listening to Protect Your Assets. I am David Hollander. Call me the Sandman. We'll be right back.
Times are changing. Some would say they've already changed. And how do you actually protect your assets? David Hollander's Protect Your Assets events focus on common financial concerns that individuals and families face in retirement. Things like how to prepare for unexpected medical expenses and ways to create income to help support your desired lifestyle. Join us at our next free event to learn how addressing these concerns can help you feel more confident about the days ahead and help you sleep better at night. Just go to pyaevents.com and reserve your seat today. That's pyaevents.com and sign up or join the wait list today. pyaevents.com. Now, back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman, and happy Valentine's Day to you. People around here call me the Sandman. If you missed any of today's show, go check out our podcast. Wherever you get your podcast, you can just type in Protect Your Assets and type in the subject you're looking for. Probably there. If you've just tuned in today because it is Valentine's Day, we're talking about how dating and hiring a financial advisor are so similar. Maybe you thought of hiring a financial advisor to help guide you through retirement. After all, it's a big step. But you just don't know where to start. Well, today we're going over the questions you need to ask to make sure you're off to a healthy relationship. All right, so before the break, I was talking about this. What's the number one mistake most people make when they hire a financial advisor? Well, the biggest mistake that we see investors make is they lack discipline to stay invested when things go awry. Also, we see them fail to invest excess cash that's just sitting around at the bank, not earning any much interest. With technological advances, being a do-it-yourself investor is now easier than ever. And I can think back when I started in this business back in the early 90s, we had to fill out paperwork and we had you sign an application and give us a physical check to open an account. Not anymore. You can simply open up a brokerage account and start investing without ever leaving your home or your couch. Hiring a financial advisor, on the other hand, requires a lot of due diligence and communication to find the right advisor for you, which begs the question, are financial advisors even worth the time, energy, and financial commitment you have to make these days? Well, the answer comes down to understanding how much time you want to spend managing your investments, your knowledge of investing, and your discipline to stay the course when markets are difficult. Of course, you've experienced 2000 through 2003, 2008, 2020, 2022. All those kind of markets showed us how markets are volatile. And as I mentioned at the start of the show today, still stuck last night, markets are getting volatile again. And unless you have a solid income plan, once you retire, your income could swing wildly depending on how you've structured your portfolio. Remember, money is emotional. And you got to think back to things like, remember last April when the market started to drop? We saw 1,000-point moves. Remember those weeks where the tech sector was off over 20%? Seemed like it was the start of something bigger. And then what happened? Had a pretty good year, right? People last year started to sell money, started to sell their positions. Well, it was too late. Market turned around and went the other way. And of course, you know this has an impact on your total return because those people missed out on the upswing in the market that followed. So when you decide that you're going to think about or you're going to work with a financial advisor, recognize that a lot like a therapist or doctor you go see, you need to listen to them to overcome your behavior bias that gets you into trouble. If you're honest with yourself and you can't do that, then don't hire an advisor because it's not going to work out in the long run. So if you're thinking of working with an advisor, what are some common mistakes to avoid as you start your search? Well, first, the biggest one we see is looking at that advisor's past performance. This happens all the time. You hire an advisor, you start working with them, and after a few years, you feel like they're not making you enough money. So you start to question the relationship. You start to do research online or talk to your friends. When you find that someone has done better than you, then you start the conversation with that new group of advisors. Of course, they're going to tell you what you want to hear, and so you moved somewhere else. Why? When you hire a financial advisor, you're hiring more than just a money manager. A good advisor can provide a holistic planning and guidance approach, not just returns. If returns is all you're looking for, then just tell them that when you start the relationship. Don't act like you're really trying to pursue a life goal through the proper management of your resources. Because if you are, once again, your advisor should know your risk level, how much you can afford to lose, and be able to show you how to touch different sources of capital when markets are down to keep your lifestyle going without any hiccups. That's the job. Holistic planning allows you the opportunity to look at your big picture goals. And what are your values and how your investments and expenditure should be oriented over time to meet your goals. Advisors who focus solely on performance, well, they might be missing the bigger picture. So if that's what you're really after, be honest with your advisor right up front. Now, the example I'm about to talk about reflects a client's experience. This was not compensated, and the experience is not representative of all clients, and results are not guaranteed and will vary based on individual circumstances. But I think this is a good example. This past week, I had a Zoom meeting with Ann and Larry. Turns out, Ann has converted a lot of her 401k over the years to a Roth IRA. She was keen on leaving as much of her money to her daughter as possible. This was her goal, because she didn't really need it to live on. And right now she thinks that. And add to that, over the last 5 years, she had invested pretty heavily into the Magnificent Seven. And so she's done well. And she's feeling pretty good. So after talking to her and seeing what they're trying to do, I let her know we're not a good fit. It's just not going to work out. What do you mean? What's wrong? What's wrong with me? What did I do? You didn't do anything. You don't really want any of this money. You want to leave it for your kids. So what are you paying me for? It's going to go up. It's going to go down. You know that. And you're not going to really need it to live on. So what are you doing? Right? I mean, just be honest about it. You have to remember, if you're not in Ann's position, any investment strategy is most likely not a guarantee of any long-term achievement. Just that simple. But a good advisor who's seen many different markets, who understands what you're trying to do, can help you create income that can be consistent, that can last through tough times, that won't change your lifestyle. These are the things you're looking for. And again, if you're Ann or Larry, then you probably don't need it. That's okay. Today is Valentine's Day. As I talk about Valentine's Day, it makes me think about dating and chemistry and how it relates to what I do for a living. Because think about this, the relationship between a financial advisor and you, it's about chemistry. Are we compatible? Do you like me? Do I like you? Do we see eye to eye? Do I bring value to the table? And will we work well together? So in a lot of ways, it's just like a date. It's going to go on for a while. But we don't know if the relationship will work until we go out on that first date. So I'm asking you to go out on that first date with me to see if we can bring value to you. I look at every client meeting a lot like this. Everybody is different. And that's what makes my job really so interesting. When there's a fit and I can bring value, it's a beautiful thing. It's nice to see the results. Good to see you smile. That really is the best part of my job. If you've been putting off your New Year's resolutions to get your financial house in order, I know this year's just flying by, then here's your chance to see if we could work together. So in honor of Valentine's Day, we've created a free guide that digs into the value of an advisor. It can show you how you can find out more. To get your guide now, pick up the phone and call our guys. They're here, Dylan, Zach. 866-PROTECT. 866-776-8328. We have this article talking about how working with an advisor can help you create more. 866-PROTECT. When we come back, it is time for our popular They Say segment, where they say hiring a financial advisor is a good first step to retirement. Is that really true all the time? Find out. You're listening to The Sandman on Protect Your Assets. We'll be right back.
Take the first step toward reaching your financial goals and get the information that can help you live a confident retirement. That first step is going to pyaevents.com and signing up for our next free event. That's pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. I am David Hollander, also known as the Sandman. Today we are honoring Valentine's Day. If you're looking for some smooth music, here you go. And since it is Valentine's Day, well, I am thinking about my sweetie, and then I think about dating or chemistry. After all, a good relationship can last a very long time. And then I think about how that relates to what I do for a living. And I only say this because the relationship between an advisor and a client, between me and you, well, it's about chemistry. It really is that simple. Anyway, we are doing more of those tax smart retirements. If you're thinking about taxes right now, it is just around the corner. Got lots of events coming up. We had a couple going on around the Bay, and I was lucky enough to be at one of them. Met some of you out there. It was great to see you. So if you want to come to one, learn our latest things that we're doing, how we're helping people, have dinner, you're welcome to come. It's a nice evening. Go to our website, libertygroupllc.com, libertygroupllc.com. Click on the events tab there at the top. You'll see there's a few dates, times. Come into a location near you. Click the blue register button. That'll help reserve your seat. Now, talking about chemistry and advisors, there's no rule that says you need to hire a professional to manage your financial life. It is acceptable and it's possible to handle things on your own. But you have to really ask yourself the question, particularly if you have never retired before, is do you want to spend your free time, your days of living, chasing the market, trying to figure out when to buy, when to sell, when to turn things into income, and how much income you need, and where does it come from, and how do all those things work together? Or are you looking forward to enjoying your life with your family, your kids, your hobbies, getting to maybe some new things you always wanted to do, and really enjoy your golden years You have to ask yourself the question, be honest with yourself. And if you want to enjoy your life, then you're going to need someone to help you. So, if you're thinking about hiring an individual or firm to act as your financial quarterback, then you want to make sure you hire the right person and avoid the common mistakes that people make in this process. So today, that's what we're talking about. There's 5 things we've uncovered that you need to ask a financial advisor or be aware of before you start that search, or certainly before you start working with them. If you're enjoying this show today, then please tell your friends about us. Or you could host a listening party with them. Make some nice eggs and bagels and some great coffee. Text them right now. Tell them to listen to this show. Protect your assets. We'd really appreciate that. Now it's time for one of our fan favorite parts of the show. This is our They Say segment, where we debunk common myths, half-truths, and sometimes just bad advice that they say.
Who are they? What do they know that I don't? And what are they saying this week? Here's David Hollander, the Sandman's answer.
All I know is that I don't know.
So here's one they say. Hiring a financial advisor is a good first step to retirement. Well, is that always true? No, not always. What do I mean? Well, I'm sure you've heard the saying, an ounce of prevention is better than a pound of cure. You haven't heard that? Okay. Well, you just did. Think about it. Not understanding the difference between a fiduciary and a suitability standard, because there are 2 different things, that could be a really big mistake. What do I mean? Financial advisors fall into one of 2 categories regarding the level of care they are legally required to take when advising you. Some are required to use something known as the fiduciary standard of care, while others may follow the suitability standard of care. So what's the difference and why should you care? What do you need to know? An advisor who is a fiduciary has a legal duty to recommend the best investment for you. The advisor must follow the best course of action for you, regardless of how it affects the advisor's outcome. Conversely, the suitability standard of care requires the advisor to show you investments which they believe are suitable, not necessarily what's best for you. So, when hiring a financial advisor, ask them the question, are you a fiduciary? And if they are, they should produce for you a written agreement that spells out exactly what they're doing for you and what it costs. The next big mistake we see is that clients don't vet the advisor's credentials. The term financial advisor is a catch-all title that doesn't really mean much. The person could be an investment advisor, an insurance agent, a holistic financial planner, an estate planning expert. I mean, we've seen so many different titles out there. What do they all really mean? Before you even seek to hire a financial advisor, get clear on the type of advice and help that you're looking for. And if you're not sure, certainly going through this process should help you open up your eyes and see what's out there. Let me give you some ideas here. Are you looking to lower the taxes that you pay each and every year? Are you trying to figure out how not to outlive your money? Are you concerned about medical bills, long-term care? Write down what you're trying to accomplish and then ask each prospective advisor for specific details about how they're going to help you with your concerns. Ask them, how long have they been practicing? And when you have a specific concern, ask them how many cases like yours they've actually worked on. Now, the credentials that they hold hopefully will help verify that they're properly trained to help you and that they have experience with other people before they try it on you. Designations like the Certified Financial Planner or Chartered Financial Consultant, those are typically holistic focused. These advisors include goals, taxes, risk management to look for the right investment strategy for you, and they usually put it in some sort of a format where you can see it, you can monitor and track it. Next, make sure you interview multiple advisors before you hire one. You may fall in love with the first financial advisor you meet, but that doesn't mean your hiring process should end there. As part of the necessary research, interview multiple advisors to make sure there's a good fit personally and that the management style matches what you're looking for. By interviewing multiple advisors, you're more likely to identify which traits are more important to you in that advisor. And in order to truly succeed with an advisor, investors need to find one who focuses on investor education, coaching to help you achieve your best result, being your best self financially. This is especially important now because economic times, market uncertainty, social unrest, the tax laws as they come in, the changing Fed, all these things are going to have an impact on the market this year and in the future. And so I recommend using advisors who use investment philosophies that are rooted in academic principles and scientifically tested theories, not just picking stocks. And advisors who act as true coaches, not just asset allocators. By interviewing different advisors, you can also get a feel for how each communicates and how they run their practice. Finding someone you can effectively communicate with should lead to a longer lasting and more beneficial relationship for both of you. Find out what the depth of their team is. Do they have backup? And will the practice last if something happens to the person you're working with? But ask yourself this question: are you getting as much consistent and reliable income from your investments as possible right now? Listen, it's not about changing your advisor. It's about becoming more informed and making changes now while rates are still pretty good and markets are pretty high right now. Because you don't know what you don't know, right? Better yet, you don't even need to leave the comfort of your home or your car right now. If you're driving, you can just pick up the phone and call us. 866-PROTECT and get your free Valentine's Day guide on how working with an advisor can help you earn more. Call 866-776-8328. If the lines are busy, go to pyaevents.com. That's pyaevents.com to register for our next free workshop, 866-PROTECT. Coming up next, how can you figure out what you are paying your financial advisor? Find out when I come back. Keep it right here.
Times are changing. Some would say they've already changed. And how do you actually protect your assets? David Hollander's Protect Your Assets events focus on common financial concerns that individuals and families face in retirement. Things like how to prepare for unexpected medical expenses and ways to create income to help support your desired lifestyle. Join us at our next free event to learn how addressing these concerns can help you feel more confident about the days ahead and help you sleep better at night. Just go to pyaevents.com and reserve your seat today. That's pyaevents.com and sign up or join the wait list today. pyaevents.com. Now back to Protect Your Assets with David Hollander, the Sandman.
Welcome back. Welcome back to Protect Your Assets. I am David Hollander, the Sandman, some people call me. Today is Valentine's Day, And today we're talking about how hiring and working with a financial advisor, well, it's a lot like dating. And we gave you 5 things, so far 4 of them, that you need to know before you embark on a relationship like that. And if you missed any of the show today, you can go listen to our podcast wherever you get your podcast by just typing in Protect Your Assets. And if you do that, you'll see that today we covered a couple things. First, do-it-yourselfers. It's okay. It's not a problem. But if you are that way, you're not going to probably listen to the advice. That could be a problem. Be honest with yourself. Second, focus on past performance. Not a good idea. Third, the difference between a fiduciary and a suitability standard. Fourth, designations and experience. I'm getting to number 5. Hang on there. Retirement is a major transition made up of many financial as well as life decisions that you need to get right to enjoy the best possible retirement. So that's why today we've been talking about working with an advisor. So hopefully you have a mutually beneficial experience and enjoy that retirement you've been looking for. So how much should you pay, or do you pay? I love this one. I'm not paying my advisor anything. Really? That really depends how much you should pay, as there are many different ways to get advice and to pay for advice in this industry. Moreover, you really need to understand what it is that you're after in terms of what you are trying to accomplish. We talked about that earlier. So ask, what are the upfront and ongoing costs associated with your advice? In today's financial advisory world, this should be your number one focus area when trying to understand how someone is going to help you and whether or not you're going to get what you actually pay for. It's important because you don't want the advisor feeling like you're taking advantage of them or their staff, just like you don't want to feel that they're taking advantage of you. So try to break it down like this. When it comes to asset management, what are they actually doing? They're monitoring and trading your account, and there should be fees associated with that. There will be fees. It's never free, no matter what they say. Are they doing other things as a result of that, helping you with your taxes, creating and monitoring a financial plan on a regular basis so you know how you're doing? What types of fees are normal? What are they called? These are where you want to write these down. Commissions. That's compensation through a commission when you buy or sell something. The other type is something called an advisory fee. This is what a fiduciary does. They charge a fee for their time, very much like an attorney would. This could be by the hour. It could be per appointment. It could be a flat or a negotiated fee. Account level fees. These are things that are built into what you buy. Expense ratios, for instance, 12B1 fees, turnover cost. Most accounts charge annual maintenance charges and fees, and make sure you get a list of what all those are. Transaction costs, buying and selling securities. Well, that's not free. It costs money. So if your financial professional is making trades for you, i.e. selling stocks and mutual funds and buying others in the process of managing your account, what are those trading costs? What do you actually pay for that? The best practice is to be clear on what your objective is and then ask any prospective advisor what they are going to charge you to get what you're after, and you have the right to ask for something in writing that spells that out. If you'd like to start the conversation and find out how we charge for our advice, then you can connect with me by setting up a complimentary 15-minute coaching session right now. Pick up the phone, call this number, 866-PROTECT. That's 866-776-8328. Again, protect more of what's yours, 866-PROTECT. I'd like to give a big thanks for the special Valentine's Day show today. My executive producer, network manager, Kevin Renfer, and of course, all my fabulous producers back there working hard, Dylan, Zach, Raph. Because without my team, I'm just another pretty voice on the radio. You've been listening to the Protect Your Assets show. I am David Hollander, the Sandman. Go out and make the rest of your life the best of your life.
Investment advisory services are offered through Liberty Wealth Management, a registered investment advisor. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. The strategies mentioned are not suitable for everyone. The information expressed does not consider your specific situation or objectives and may not be appropriate for all investors. Past performance is not indicative of future results. To better understand the risk associated with investing and how it reacts to different market conditions, listeners should always consult with their qualified investment professionals, financial advisors, legal or tax specialists, and conduct their due diligence before making any financial decisions or taking any action. The legal information provided on the air is not intended to substitute for callers hiring their lawyers to advise them about personal legal matters. Investments involve risk and, unless otherwise stated, are not guaranteed. Liberty Group LLC paid for the following program, and the host's views and opinions do not represent those of the station or its ownership. California Life Agent number 048569. Persons engaging the services of one affiliate of Liberty Group LLC companies should be aware that each company is operated separately. You are listening to the Protect Your Assets Radio Network.